Welcome to the From Surviving to Thriving Beyond Paycheck seminar. Take a listen to our third speaker. The link to other speakers would be in the description box. You again, and I would move to Amara. She's our last speaker for this. And Amara is a seasoned mortgage professional. She's based in Toronto. She has over 5 years experience across the Canadian real estate and mortgage sector. She's actually a certified public accountant, right? She's a CPA, and she utilizes all this advanced finance expertise to provide exceptional mortgage services, specializing in residential mortgages, transfers, switches, refinancing, and also debt consolidation. So she's renowned for her professionalism, and she's client-centric, right? She that's the approach she uses in the industry. With access to over 100 lenders, Amara offers extensive options, flexibility, and personalized mortgage solutions to our clients. When she's not closing deals, she's out there actively mentoring and volunteering in the local school board. A blend of financial acumen and dedication makes her stand out in our field. And welcome, Amara. Please feel free to take it away.
Thank you very much, Omar. It's so nice to be here, and I'm grateful for everyone who had the time to join. It means that we'll have a unified goal, a common goal for being here today. And I appreciate the previous speakers, Mr. Bosede and Adiola. Adiola, it's good to see you. We've kind of like had interactions virtually, like on groups and things. So it's finally good to meet you, and Mr. Bosede as well. Great points have been shared. And as the last speaker, I feel like I need to ensure that people are fully engaged. And so when I was talking to Omar before the session, I was raised by two teachers. And so I like to ask questions. I like to have people engage when we talk. So I don't have a presentation. I'm just going to chat through the points, and hopefully people can take away what resonates with them. And, of course, we can always connect after the session. Omar knows where to find me. And so before I get into it, Omar has introduced me. My name is Amara. I started my real estate journey in Canada 5 years ago. I'm a licensed mortgage agent. I fund deals in Ontario and across Canada as well. I'm a CPA. I'm an accountant by profession. So, and I focus, part of my background, I do tax advisory. That's part of what I do. By training and stuff. So I've been in the finance, accounting, tax space for over a decade now. And I personally have a personal, I'm going to try to start my timer here because I don't want to talk too much. Like Dela, I also get too excited when I talk about money. Like it's just money. So I'm just going to start my timer because I want to make sure that we all there's time for questions at the end as well. I have a personal view when it comes to money, and that is that there's so many ways to achieve whatever we want to achieve, right? Like there's so many paths to get to where we want to go to. And I think more importantly, the first step people need to take is to really define what your goal is. Like, what do you want your life to look like? Otherwise you just end up jumping around here and there. You start this on track. Like, what exactly do you want your life to have a mental picture of what do you want your life to look like if you're still in your 20s, like when you get to your 30s, for instance, when you get to your 40s or 50s. I think that's the first step. And I think we all need to understand our money psychology. The very first book, like I said, I was raised by two teachers, so I read a lot. That's what I do. You find me with books all the time. So one of the first books I read, when I started getting interested in finance is The Psychology of Money. I'll encourage everyone to pick that book and read it. It's because one of the key things that I still hold dear to myself from that book was defining your goalposts, right? Because sometimes we get sucked into this web of you just keep running this race and just keep doing it. So there's not really destination in sight, and we're just in this endless wheel. At the end of the day, we also want to enjoy our lives. We also want to live our rich lives, right? And sometimes you really don't have to have millions to do that, right? So I'd encourage everyone as they started to understand your money psychology. define how you want your life to look like at different stages in your life. And there's no straight path. You can be working your 9 to 5, take a break for 6 months, do whatever, come back to work. Like there's no, path of I've graduated and then I have to work till I'm 65. And it doesn't have to be that way. Like you can design it the way you want, right? Like, so I really encourage everyone to take some time and think about that in your personal time. And then from there, move on from there. Today, I'll just take the next couple of minutes to talk through what it takes to be a mortgage agent or a broker at some point, and dig into what it takes to be successful in the industry. But before I go into all of that details, I want to ask a few questions to our audience. Like I said, I was raised by two teachers. I was raised by a lecturer and a teacher, so please pardon me. How many people, if you can just type in like a 1 or like a yes, whatever makes you feel good in the chat box, or just click the raise hand button. Like if you've purchased a property in Canada, like how many people, like if you have, I'm just going to be looking at the chats to see the response we get. Omar, you're going to have to help me out. And one of the things that I think I have to say unashamedly is like my tech skills are very bad, very terrible. So I'm that person who'll be fumbling around on a computer. And so, yeah. Okay.
I can help you here.
Okay, thank you. So just type in anything, 1, yes, anything, just to indicate like, you've got some, you've had some interaction with real estate, you've bought a house specifically. And okay, yeah, I see there's been a few people have raised their hands as well. That's great. And if you did, how did you finance that? Did you just go to your bank? Everyone has a bank account, so that's usually the default. Just go to your bank and talk to them about what you need, and then just go from there. I bet most people would have done that, which is great. And if anyone has used a mortgage agent or a mortgage broker, excluding Mr. Bosede, because I know you're not allowed to have that one. So because you're in the industry. So anyway, the point where I'm going to is just I wanted to get a sense of where people are at, so I know how detailed, how basic I need to go in providing the information. So I'll take it as basic as I can. Just to go back to the basics, right? Like mortgage is really like just getting money to help you pay for a piece of real estate. That's it. Like it's just that money you need to pay for real estate. Like unless you have 100%, if you want to buy a house of 500K and you have all the money, by all means, you don't need a mortgage, go buy it. But to the extent that you need support, like financial support to be able to own a particular piece of real estate, then you need somebody to fund that deal. That's what we call mortgage. Simple as that. And there's 2 ways you can get a mortgage. You can either go to your bank, your financial institution, where you already have an existing relationship. They take your application. They need to understand your financial history, how stable your income is, how credit worthy you are. They do. It's like combing through your life, like, with a fine-tooth comb, actually. They take all that information and let you know how much they are willing to make available to you. You can do that. Or you can use a mortgage agent or a mortgage broker to help you shop around. For me, that's the biggest advantage of using a mortgage agent, because as a mortgage agent, you'd have access to multiple lenders. You're an independent person. You're not tied to a particular lender. And so if I wanted to get a mortgage for my clients, all I need is a single application from that person. So I collect all the information once. And with that information, I do the credit check just once. With that, I can use that to shop, it's the lenders, they want the deal, right? Like, so my job is to find out who can give me the best deal. That's it. Like, so rather than a person who wants to purchase a piece of real estate go to multiple, let's say banks, you want to go to RBC, go to Scotia, go to BMO like TD, you want to go to different banks. And every time you go there, you have to resubmit your documents. They have to do their own credit check because they are different institutions. Rather than do that, you can use an agent to do that shopping around for you with just one application. So that's the biggest value proposition for a mortgage that a mortgage broker would offer. And then what does it take to get started? The requirements for you to become a licensed mortgage agent is, for Ontario in particular, you have to start as a mortgage agent level 1. So there's 2 levels. There's a level 1 and there's a level 2. And then, you can become a broker either from level 1 to a broker or from level 2 to broker. So the difference between a level 1 and a level 2 is that a level 1, you do like all the mortgages, but you're not authorized to do private mortgages, like private deals, right? Like, so if you're someone who's not, because private deals are a bit more riskier, it's a lot more work. It's actually a niche, right? Like, so if that's a market you're not really interested in, then you don't have to do the level 2 licensing. But the first step is always to get the level 1 license. And to qualify to do that, there's no required BSc or educational background required. Like anybody, as long as you're 18 years of age, you're a resident of Canada, and then you have a mailing address in the province where you want to get licensed. So if you want to get licensed in Ontario, then you need to have an Ontario mailing address. So it could be your house address, but it just can't be a post office box. It has to be an actual mailing address. And then, of course, you have a valid email address. Once you have those things, you can, then you need to, okay, I'm just going to list all the requirements here. So you have your valid email address, then you're going to get authorized to deal in mortgages by a mortgage brokerage. You need to join a brokerage at some point. And then you need to complete the license exam. Now, before you complete the exam, you have to do it's like an education program. And the cool thing about doing that is it's pretty flexible. There's specific certified education providers that you take the course through. You can't just go online and do the course. No, so there's specific providers. And I would personally recommend REMIC. And that's the one I did. A lot of people I know do it. There's about 2 or 3 of them in Ontario, for instance. And I can drop the link. I can share the link with Omar. Maybe we can circulate that after. So you can take the course through REMIC. And it really depends on you. How quickly or how long it takes you to complete the course really depends on you. I did mine in a week. I did like a compressed program. So there's options, right? Like, so if you're busy and you can't really afford a full week to focus on that, there's options for like weekends, to spread it out over a period of time. So you take the, courses over weekends or like in the evening. So there's options, right? Like, so once you take the course, at the end of the course, so the course fee you pay covers you for the exam. So you're not paying separately for the exam. So you have the course fee that you pay will cover you for 2 attempts at the exam. But honestly, like if you just give it that time, the first attempt you'll be fine. Everyone here is smart, I believe that. So you just I did the intensive course for 1 week, and then the next week I did the exam and I passed. But if you don't pass, you still have an opportunity to sit for the exam again without paying any additional fee. But if you don't pass the second time, then you have to re-register for the exam yourself. Okay. And the cost for the course is not too expensive. I don't remember how much it was now, but it's somewhere around maybe 1,500 to 2,500. It will be somewhere in that range. So it's not crazy expensive to do, and it's an eligible expense as well that you can deduct, when you're filing your taxes. So that's good as well. So you can do the program virtually. So if you're working, you have your 9 to 5, it doesn't stop you. If you're interested, you can do it from your home at night, whenever, so you can do it virtually, do the exam. The exam as well, you can do the exam virtually. I did mine virtually, so you can do that virtually. So once you pass the exam, the next step will be for you to find a brokerage, because you can't practice as a licensed person. You can't even get your license without joining a brokerage. So it's a prerequisite, right? Because the brokerage is the one to file for you, to apply for your license. So once you've passed the exam, the next step will be to identify a brokerage and join. And this is key. And I would say it's key because the brokerage you join, it can make or mar your business, honestly. And I'll share a personal experience. I've had to change my brokerage. And, when I first got my license and I joined my first brokerage, they had a fantastic training program, right? But after the training period and, when I was out there, I was enthusiastic, talking to people, and I started getting deals. And I found that my first 3 deals, I got these deals like within 4 months of joining that brokerage. Like I couldn't close any of those deals because so the first time, the first time I had an issue, like not an issue, but it was just, let's just say it was just it took me some time. By the third time I realized, oh yeah, I don't think I can grow my business with this brokerage, right? But it took me some time to realize that. Just because, the training was fantastic. I was like, oh, great, but that wasn't just it, right? Maybe I'll share a bit more. I noticed that it was a brokerage that they didn't have much of a diverse pool of professionals. They had a lot of experience that they had been in the business for over, 35 years. So it's a well-established brokerage, but the particular franchise. So some of these brokerages also operate as franchises, right? So they have the umbrella brokerage, and then you have the smaller offices that they actually function as independent franchisors, right? So they buy into the franchise. So the particular franchise office that I registered with, I realized that it was more, they didn't have a lot of diverse pools. So, and I'm Nigerian. I've been in Canada 6 years. So it was only natural that most of my deals were newcomer deals, right? People who were buying their homes for the first time and all of that kind of. So there was a lot of bottleneck because these were unfamiliar deals for them. Let me put it that was what I eventually realized, that okay, these people are not these are Canadians. They've been in this country for years. You are young people, like middle-aged 50s and stuff. So the kind of deals they are used to, they're not used to seeing somebody who's been in Canada for just 1 year and they have 50,000. It just, it's like, where is this money? So there was always that, antenna going up and flags being raised when I knew that I've done this. People come in here with money. Just because it takes you 10 years to save up for down payment doesn't mean that, somebody coming in who's been around for 2 years is not legit, right? So when I started seeing those things, I was like, okay, yeah, I needed to move away and move to a brokerage that's, they have more experience dealing with a variety of, type of applications. So I had to leave that brokerage. So that's why I say that the brokerage you join can make or mar your business. So key things you want to keep in mind when you're choosing a brokerage. And I like to say that after you pass your exam, you are the one interviewing the brokerages, not the other way around, right? Because they need you more than, well, you need each other, but they do need you to stay in business, right? So they'll reach out to you to schedule interviews, but approach the interview as you being the one looking for a home. You're the one interviewing them, really. So you want to ask them about the training opportunities they offer. Look, commission split is the last thing, honestly. I know the first thing a lot of people look at is, oh, how much is your commission split? And you want to go with that. No, don't do that. It's important, but don't let it be the top item, particularly if you're new in the industry. You want to join a brokerage that offers good trainings. You want to join a brokerage that offers good technology. So that, some brokerages they do mortgage application with PDF documents. Some people, you're able to send out a link to your clients and they put in the information you need. So you want to look at the kind of technology they have to make your life easy. You want to look at marketing materials, what marketing support do they provide? Do they have somewhere where you can get marketing materials from and all of that kind of stuff? And then you talk about commission. And the reason I say commission split should be the last on your list because you can always move, right? You want to have a solid start. And then once you're familiar with, you built out your contacts, you've started corresponding with lenders and all that kind of stuff, then you can always find another brokerage if you now want to focus more on, okay, now I've paid my dues, now I need to keep more of my money. So you can move to another brokerage that has a larger commission split, right? So that's how that would be my recommendation on what you need to be aware of. And when we talk about income opportunities as well, look, there is no magic. What you put in is what you get out. Like it's as simple as that. Like it's not there's it's a commission based industry as well. Our commissions usually will range anywhere between 0.5%. So like okay, I'm going to break it down. There's like two types of standard mortgages. You'll see like the regular mortgage that, checks all the boxes, everything is perfect. And then there's like the private mortgages. I'm not going to talk a lot about private mortgages because that requires a certain kind of licensing. So I think even before you do that, you need to like do the normal level 1 licensing. So I'll just focus on that. And yes, I would also add that one of the value propositions for a mortgage agent, if you're thinking about joining the industry, is that your services to your customer is free of charge for like standard mortgages. It's only when we talk about privates that there might be mortgage, fees, like additional fees, but that's different but for most top tier lenders, like A lenders, your service as a mortgage agent is free to your customers because you get paid by the lenders. Okay, so that's a solid value proposition as well. When you're talking to your clients or potential clients, and so in terms of what the commission looks like, it could range from anywhere on the standard side from like 0.5%, so like maybe like 1.5, 1.75%, depending on the lender, and also depending on your brokerage. And so let's say the property and the commission, the percentage is applied on the actual mortgage amount, not the value of the property. So let's say somebody buys a property of 900,000, they put down minimum down payment of 20%, and then you get the mortgage for the balance. So your commission will be calculated based on the mortgage amount, not the entire purchase price. If it's a deal that has mortgage insurance, your commission will be calculated on the mortgage plus the insurance, because the insurance is added to your mortgage, to the total mortgage, that the lender is going to give to your client. So that's how the commission is calculated. So let's say you get a mortgage amount of 800,000 and you got the product from a lender who offers 1% commission, then the commission is 8,000 for you, right? And your brokerage would always split that commission with you. So let's say as a beginner, when I first joined the industry, my brokerage, the split was 60-40. So I would keep 60% of the commission, the brokerage would keep 40. I was okay with that because I needed to learn, I needed the support, I needed the training, which is why I'm like, as a beginner, focus more on learning about the industry, building out your network and getting your contacts within, with lenders, right? And then go from there. So I was fine with a 60-40. Then after my first year, I moved to another brokerage my second brokerage has less technology support, but I was fine with that because I had already set up my own systems and things. So I'm not very heavily dependent on my new brokerages like marketing materials because I had sorted all of that out. So I was fine to move somewhere else for a larger commission split. So where the brokerage I'm currently at, the commission split is 80-20. So I get to keep 80% of the commission, the brokerage keeps 20%. So that's what that looks like. And then again, depending on your brokerage, you can make additional money. There's like your referral bonus as well. It really depends on the brokerage. So some brokerages, the ones that are really large, they have like deals with certain lenders and stuff that because they've been in the business for so long, they get additional points, like they call it bips, like they get additional points. So like when you close a deal, if I close a deal with True Brokerage A, for example, my commission may end up being more than if I close a deal with Brokerage B, because Brokerage A may have volume bonus, right? Which they give me extra bonus. So there's referral bonus, there's volume bonus as well. And the other thing I'll say about being in the mortgage industry is you have to be ready to put yourself out there. Like there's no magic really. You have to, like, if you're someone who doesn't like talking to people, maybe this is not the right industry for you. It has to be something you have to do. And there's no limit to how much you can make really. And the other thing as well is it's an industry that's highly regulated. It's an industry where things change a lot, right? Like the rules are constantly changing. So you have to be somebody who you're willing to keep up to date with changes in the industry. But then again, that's where a good brokerage comes in, because if you're in a good brokerage, they will keep you informed, right? Like whenever something changes, like the same day you're getting a newsletter, they're sending newsletters to your contact list and all of that. So yeah, you don't have to like do all the work yourself. If you have a good brokerage, you can get a lot of that support in terms of information through your brokerage. And of course, networking, there's no magic. You have to network with people within and outside the industry. Like I personally attend like open houses within my city, and I was told when I was joining the industry to act like the mayor of my city. Well, I'm not even, but like that's the mindset, right? Like be involved in local community events. I've been privileged to like, get clients through like even my kids' school, right? Like I'm in the school board in my kids' school, right? Like these are life things. People talk about things, right? Like people need help here and there, right? So you can get a client from anywhere. You can't predict where you get a client from. That's just it. And I would say that this industry is a referral industry. Like you have to be willing to be customer centric. There's like if you do well for one person, that person will sing your praise and will tell everyone. I'd like to say that everyone who's buying a house knows somebody else who's buying a house, because we tend to move in similar circles, right? Like so, if somebody knows that you're not just out to make a commission out of them, and they can actually, I've redirected clients that came to me to like, I say, no, go to your bank and get this. You'll get a better deal. Like I've done it, right? Like, yes, I will not close the deal. I won't get that commission, but guess what? That person will refer somebody else to me. So it's not, you have to have that long-term view. I've walked away from deals where I know that if I help you get this thing tomorrow, 6 months later, you insult me, like because I'll put you in a product that it just will not work. Like it won't make sense for you. If you want to go and get it from somewhere, that's fine, but I wouldn't do it, right? Like so, and I think over time, people will get to understand and realize that, oh, this person is not just out for the commission. This person is actually interested in adding value, and that in itself brings referrals. I know that I'm at time, but I just have one or two other things I wanted to quickly add here. There's also other opportunities for making money in the industries, and I'll use the brokerage I work with, for example. So there are people who do not want to actually buy a house. They don't want to be actively involved in real estate. So as a mortgage broker, because I have access to multiple lenders, there are lenders who what they need is money. So like I also like connect people who have money. Let's say somebody has 25,000 somewhere, it's not enough to make down payment depending on the location, but they don't want to leave it in their accounts. And, they're just looking for what can I do with this money? So there's also opportunities for me to earn a referral bonus by connecting. If I have somebody in my circle that has some idle cash somewhere and they are willing to take the risk, like to connect them with my brokerage. My brokerage has like a private lending company, like subsidiary. So they have a private lending company where we pass through all private deals through that particular subsidiary. So when we have somebody who needs a private mortgages are usually short term, 6 months, 1 year. Sometimes it could be somebody, Mr. Bossede talked about flipping a house. Like it could be somebody who is trying to work on a fixer upper, right? Like they just need money for 6 months to do some work in their house, and they'll close that house and then refinance and all of that. Sometimes they may not want to go to the bank, or they need some flexibility with the funds and they don't need a lot. Maybe they need just 100K, right? Like, so I can connect somebody who has 50K, 25K or whatever. You're willing to put that money away for 6 months. And those private mortgages usually make quite a bit of money. Like the ones I've done in the past, like it could be up to like 10% for like 6 months, so that the person gets their interest payment monthly. And then at the end of the term, when, normally private mortgages are short term. So at the end of the 6 months or 1 year, the person gets their capital back. Now, this is not without risk. I'm not telling you that it's 100% risk free. It's just an opportunity for people who don't really want to, they don't want to, be a landlord and all of that kind of stuff. So as a mortgage broker, you have the opportunity, you have access to those kinds of opportunities that you can refer to your clients, and then you get a cut as well when you do those referrals. And one of the last coolest things, before I know, I said my last point was my last, but this is the real last one. So one of the other cool things I really like about doing this is, the fact that I get to deduct some of my home office expenses when I file my taxes. For me, that's the biggest advantage because I would still pay my mortgage anyway if I didn't have this business, right? Like, so an added benefit of being able to deduct a portion of my mortgage interest, my hydro and all of that kind of stuff. I mean, it's not everything, it's a portion, but it helps, right? Like, and particularly when you're first starting. So like the first year when I started, I didn't make a lot of money the first year. And so the expenses I was able to deduct, I didn't incorporate my business. I did it as a sole proprietor. And so the expenses, my business expenses, I use them to apply to my employment income. So I use my business expense to actually reduce my employment income. So like indirectly, I made extra money, right? Like, so, I'm an accountant, so I like to think about all of those kind of things. So that's also something that's really cool. All you need to really get started is your computer, internet, and, you can do it from your home, right? So, so that's it from me. Thank you all for listening.
Thank you so much, Amara. Thank you, Adiola.